how is it like for you? Were you ever like doubtful? Because I mean, if it were for me, right, I look at my portfolio, draw down like 50%, like 90%, for example.
Yep.
I don't think I'll be able to sleep. You know, I'll be like, what? Everyone's living. Can I be wrong?
Yeah.
Hey guys, welcome back to the Chain Debrief Podcast, the podcast about all things cryptocurrencies. So for today's episode, Jacky and I are really excited. So as you know, we've had guests before on the podcast and they've shared a lot of different insights from their own areas of blockchain and the crypto world, you know, such as like options trading, whether it's the NFT world, the GameFi world, and so on. And quite a lot of these different projects and protocols are really enabled by the access to finance today, which I would think it's more accessible today than ever. And that's why we're really excited to hear from a guest that is involved in that space specifically. And it's none other than the founder of Defiance Capital, a crypto-focused VC, Arther Cheong. Arther, thank you so much for being with us today.
Hey, thanks for having me here.
Cryptocurrency exchange.
Non-fungible. We only take Bitcoin and other favorite cryptocurrency.
All right, so before we even begin, because we have a lot of questions, trust us, thank you so much for dedicating your time with us. What's your story? Like, how do you even get started in the space?
I get more involved in crypto space in 2017 actually. So I think that time I started working for a few years. I was looking for a few places to invest my savings. I've been investing in the stock market since 20 years old and also dabble a little bit in FX. And also actually I tried P2P lending in Singapore before, but none of it was very satisfactory. I think especially I'm a more growth kind of investor, and Singapore stock market, there's just not many growth stocks to invest in. I mean, I also did some US market, but I learned about the growth story of crypto in 2017. Like 2017 is also the year where Ethereum went from I think almost $10 at the beginning of the year to $300 at the top in the span of less than 4 months. So that was very exciting, and I start to spend more time learning about it. So I bought my first crypto, which is Ether, at around $300 in around October 2017. So that's how I really get started into crypto.
Good times.
Yeah. And yeah, so that's the story. And I would call myself a more fundamental-based investor. So after doing more research into crypto space, I realized that this is not just a fad. Obviously, there's a lot of hype in the space, but I can also see the underlying use case and benefit. So after doing more and more research, I decided to quit my job to pursue this space full-time. So initially, I started a crypto startup. I was trying to build so-called the Bloomberg terminal of crypto, kind of similar to what Messari is doing right now. But I realized that I'm actually a better investor than founder. Because after like 6 months to 9 months of doing this, I realized that my talent is investing. So I've been just focusing on investing since 2018. But actually, it was really at the worst time because 2018 was the bear market. Like Bitcoin even dropped to like around $3,000+. But I think what really this is like the turning point where I actually did not give up, like stay through the tough time. And then I'm always back to the key question that I've always asked myself is, what is the main use case of crypto? And I think back then, the only few use case I can see that is really valid is finance. Because Bitcoin is a decentralized money, but you cannot support a decentralized money without a financial service that is also decentralized. Because let's say hypothetically DeFi doesn't exist and only have Bitcoin. In the end, you will just be moving Bitcoin from exchange A to exchange B. So that's quite pointless, right? Like you have decentralized money, but you are just moving from custodian A to custodian B. So I think that DeFi is the most important and major use case for crypto and blockchain. So I was getting very involved in the DeFi movement since the very early days. So the term decentralized finance was coined in late 2018 by a group of early DeFi founders. So I getting involved, use MakerDAO, use Compound, DeFiDX back then, and I think I really see that this is the only valid use case because from the ICO bubble, you see a lot of use cases have experimented, but none of them have really materialized. And so that's how I really lead to more and more success, because when I'm an early community participant, I see a lot more opportunity. I see how some of the protocols that were actually gaining adoption were still not being picked up on the market. They're still very undervalued. So obviously, like I continue to invest in them, and they continue to do very well. So that kind of success lead me to founding Defiance Capital in 2020.
Okay. Maybe we reverse back and talk about the bear market. You briefly mentioned about the bear market in 2018, right? how is it like? Because a lot of people, I mean, maybe right now, you would argue that we are sort of in a bear market right now because, the top of Bitcoin to now is minus 50% drawdown, right? So how is it different from the 2018 bear market that you've been through?
Okay, I'll start about how is it like first, then I'll say whether how is it different.
Yeah.
So I think how is it like was definitely very bad because during the 2017 to early 2018, the hype cycle, there was a lot of money being raised in the form of ICO. And ICO, initially, it was mostly coming from retail. But after people see the profitability of ICO, there was a lot of more institutional capital being involved, mostly the crypto venture fund, and also some syndicate getting involved. But it was really bad because Bitcoin have actually topped at around January 2018, but the ICO bubble did not really end until Q3 2018 because people's thinking it's okay, it's just a consolidation. There's still a lot of hype around the ICO, but as all those ICOs start to flop immediately when they get listed, and when this start to happen a lot more often, people kind of realize, okay, shit, even the ICO is not working anymore. And the worst thing is, I would say 99% of these ICO actually do not have a valid use cases. Like people that time were talking about building Uber on blockchain, building like a Airbnb on blockchain,
Everything.
whatever. Even in Singapore, you have a few notable examples that all did not work out as well. So it was bad because there was no actually any use case that was like proposed actually work out in the end in a major way. So people kind of get quite disillusioned, and I have so many of the friends that left the space in trove. And actually, in hindsight, it was the worst time to leave the industry because they are literally living at the bottom. So they did not stay long enough to reap the dividends of the bull market. I think that's really what set me apart from a lot of people who left the industry back then. They really did not manage to stay to capture the upside of the subsequent bull market. So it was bad because people keep living in drought. I mean, I don't want to put a name out there, but there was a very notable company in the crypto space, is exchanges. They rented a huge office at Asia Square, huge one, but they get the office only ready around, I think, early or mid 2018. And they only fill the office with 20% of the employee, and it was like a CBD Asia Square, right? And only 20% of the space was filled, and it was so empty that they have such a huge space that can actually host like 100%, like a mini
gathering
talks and gathering. And then I think within 6 months they give up the lease. Because it was so bad, like 20% feel like, and it's not a startup, it's like a major exchanges. So that's the kind of thing they need to do as well. And you can also see venture funding start drying up towards the end as well. Like no matter how good a team is, whatever, it's just very, very hard to raise fund back then. So I think that is how bad the market is. The people just leaving and nothing much to do. Like the most active, the activity that people are doing most is just speculating on BitMEX back then. And I think the difference compared to back then and right now is you see a lot more use case already proven. It's just that the question is, are these use case overhyped, and are we overbought with the valuation and the hype on it? Let's say like DeFi is already very proven. There's 200 billion plus of TVL. There's like user using it. It's still growing, although the growth had like a slightly slowdown recently. But on the whole, it's still growing way faster than whatever other non-crypto space you can find. NFT have a breakout year. OpenSea have the highest volume ever for January or February. It was an all-time high. And we are still seeing NFT breaking into the mainstream consciousness consistently over the last 3 to 6 months as well. So I think in that case, the difference is this time the use case already proven. It's just how big can this use case get. So this is the biggest difference. And this time around, you see a lot more venture funding being raised that in a more committed case. So I think let me break down a little bit. Most of the venture fund, especially in the US, they are being raised in a way that the investors are locked in for at least 5 years to 10 years. So in a way that they will always they will consistently invest because the LP already committed to invest for 5 to 10 years. So you're not going to see the venture funding dried up so significantly compared to last time. Obviously, like when the market at this condition, VC will be a lot more conscious, but you will not like just disappear completely. So I think very good team building products that makes sense, have a big good product market fit, we'll still be able to raise fund this time. And I think we're still going to see a lot of use case expand. Also, even for the more established companies, they also have raised a huge amount of capital or just been very profitable. So they have a huge war chest to continue to push for the growth and mainstream adoption. Like notably FTX, Crypto.com, you see like the kind of like major deals they do, like buying sports stadium naming rights, sponsoring F1s, or even getting like top US athlete like Stephen Curry, Tom Brady to be the ambassador. So all these things will just grow the mainstream adoption and consciousness. Yeah.
So I think like you mentioned, right, it's like the main difference is that the use case is that there's validation of the technology in that sense lah. With Defiance being like around for like a couple of years already, tell us a little bit more about that story, right? Like what were some of the early projects that you guys invested in? What were some like early successes that you've seen? Was there a challenge in like trying to get your name out there and trying to enter the doors, or were there a lot of people that were very welcoming to the idea of Defiance coming into like finance their projects?
So I think for us, we had the right approach right from the beginning. So we had the relatively good start compared to many other investor or investment fund in the space, because we focus on our strengths and our advantage, which is decentralized finance. Because I myself built my fame as a DeFi community guy and also investor in the space. So when I started Defiance, I'm already very well connected to like most of the teams and the investment fund in the DeFi space. So you get a lot of opportunity just by your connection and by your fame. And having decent amount of social media following definitely helps as well. So we've been doing very well in investing in DeFi since Defiance was founded. So I think that was the story that really focused on your strength and advantage. And I think that lead us to having a slightly easier start compared to many other investment funds in the crypto space.
Yeah, I wanted to go back to the 2018 time again, right? So, when you say a lot of people were leaving the industry, and you stuck on, you held on, right? How was it like for you? Were you ever like doubtful? Because I mean, if it were for me, right, I look at my portfolio, draw down like 50%, like 90%, for example. I don't think I'll be able to sleep. I'll be like, "What? Everyone's leaving. Can I be wrong?" What are some thoughts that go through your mind and whatnot?
Yeah, I think definitely you have some doubts, but I always try to go back to the fundamentals. Like, does this technology, is it valid? Does it have actually an use case that is people actually want to use? And after doing research, because I during the bear market, I realized that people just don't even do research anymore because they're just so disillusioned. So I just do research. I can see the adoption is still going. So I think one major key facts that keep me going is you see 3 major fiat-backed stablecoin was launched in October 2018. Gemini US dollar, USDC, and I think Paxos were all launched around the same 2 months. And they have incredible amount of adoption since the beginning. Although it was small, but you can always see they start growing. And to me, because we were very familiar with the ICO space, one of the biggest critique I have toward ICO back then is like they all using their own currency as a payment currency. But that doesn't make sense because there's a network effect of a currency. Like nobody want to use your ICOA token to pay for your services. I want to use a common currency, either Bitcoin, Ethereum, or like even US dollar stable coins. So I always believe in the stable coin thesis, and I see the adoption and growth of stable coin. That actually convinced me that there is still adoption happening in this space despite being in a bear market. So I think I always go back to the fundamentals, look at the data, underlying fundamentals, and that convinced me to stay on. Obviously, like I do not know when the industry will recover, but I think that by still talking to people in the space, seeing other respected builders, I think that gives me conviction to stay in the space.
Were there any doubters that told you like, you sure or not, or like, wow, you're crazy?
I wouldn't say any doubters, but you're definitely a bit disheartened to see your friends that you think believe in the space as much as you leaving as well. And a lot of them are even much more well-to-do with me. Even when they left, they still have like a 7-figure portfolio. I was not even anywhere close to that when I stay on. So you see that people who are like done better than you also losing belief. That's a bit disheartening.
But it's crazy because you've managed to reap the benefits from your conviction, which is great.
So nowadays, capital is more accessible.
Yes.
Do you think we're in a bubble, or like, because a lot of like VCs, what they do, right? They jump on to the next hot thing, right? And then after that, everyone just want to fund every project and hopefully one become 100x, right? Do you think like that sort of like becomes something that everyone should be wary about? Because a lot of projects right now, they launch, they show their roadmap, and then they will raise the capital to build out the roadmap without proving whether they can do it or not. What are your thoughts on that right now?
Yeah, I think depending on which segment you look at, some segment there is a mini bubble going on, or in some case actual bubble going on. So I think, let's say for venture funding, I would say yes, because we have seen quite a lot of let's say VC, they were a bit late to the space. They're trying to play a catch up. So they were quite indiscriminately deploying capital, irregardless of the merits of the product and the team. And like, does it make sense to have another fork number 5 on another EVM chain? We see quite a lot of like let's say you're doing another DEX fork, Uniswap or Sushi fork on EVM chain number 6, you can still get some capital invest as long as the team is semi-decent. And we kind of stop investing in this already because we don't think there's anything innovative and unique about all this kind of like fork of like initial DeFi idea. So yeah, in that sense, I think there's a bubble in that sense, but it's kind of like a creative destruction thing playing out in the space. I mean, even you talked about non-crypto in a traditional VC space, right? In the valley, they will always, like, when some sector get very huge success, one huge breakout story, you always see these VCs starting to chase. And when they start losing money, they will learn the painful lesson, then they'll stop chasing. So it's just like a free market correcting itself. So I think, but yes, I would say that in a venture funding, in some segment, there is definitely a bubble right now. But it's also because the whole venture, or the whole crypto is like, the upside is so high. In a way, it still makes sense to invest if you think that this has a chance of becoming the next XXX. So the most popular and never dying theme is just like the next Ethereum, right? So like the VC have been loving this since 2017. Even until now, people still love this theme. But the fact is, you do see some success, right? Because like Solana was 100x last year. And for VC who are in there, it's like a few 100x, because I think the first round was like 20 cents. I forgot the exact number. Luna also, like Luna, the first round was I think 20 cents as well. But actually, even as a retail, you can buy it for like less than 30 cents last year as well. So in that sense, you can't argue they are wrong in a sense, because VC venture capital is a very power law business. Literally, like for traditional non-crypto VC, probably 95% of the fund return can come from the top 3 investment they make. So in that sense, it makes sense to invest in something with a lot of upside.
Okay, we wanted to talk a little bit about DeFi, right? So a lot of innovation in the DeFi space right now seems to be on, like what you mentioned, new forks or like new DEXs, right? With a little bit of added incentive. And then what happens is that liquidity is basically moving from one DEX to another chain. So it's not very loyal, right? And I don't know whether this is sustainable or not, So like, it feels like one DeFi protocol launch already, right? After that, maybe very hot already. Then people move on to another new DeFi protocol. I just want to hear your thoughts on that. This is happening, and like, I don't know whether it's sustainable or not. And there will be a lot of back holders that are just holding their liquidity on one DeFi protocol, and then while they're left behind, right? Because they might be late.
So I think a good analogy you can look at it is like back in the DeFi summer 2020. So Sushi was the first Uniswap fork, right? But after that, there was actually a few Uniswap fork that come after Sushi, but none of them have been as successful as SushiSwap. Actually, you cannot even. I mean, SushiSwap is arguably successful. I mean, right now there's some issue going on for the last few months, right? But it still have like at the peak, I think 5 billion market cap. But other fork never really managed to attain that. I think there was some fork, I even forget the name. I think Sashimi Swap or whatever lah. But none of them have really even attains any level of adoption. People are just like farming the token and then selling it. So I think you're gonna see the same thing play out. So probably the first DeFi fork on EVM chain number 2 will work out well. Even the number 3 or number 4 will work out well, because the community do want to use some DeFi product. But I think that's the marginal return is definitely decreasing very quickly, because when you go to EVM chain number 5, number 6, right, there's not even existing community that really want to use those products. So it becomes like a mercenary capital from the other, like this so-called DeFi degens or U-farmer, just moving their capital just to farm the token and then just selling it. So I think it makes sense, the first 2 EVM chain, because there was already existing community there. They do want to use the services, just that they do not have the product to use. So the product satisfy the demand. But when you go to number 4, 5, 6, then the marginal returns start decreasing. So I think that it is not sustainable, because we already passed that phase. In fact, you can already see it playing out. Avalanche, BSC was quite successful. To some extent, Phantom also doing okay. Solana is not EVM, but they have their own community, so it has been doing okay. But beyond that, right, you can see all the other TVL and what did not really hit a very high level already. And the farm, the APY all collapsed pretty quickly. So I think right now I would say we are already well past the phase that you get a very high expected
APY lah.
You get a very low expected value from aping into all this kind of new farm already, I would say.
Okay.
You spoke about like Fox, right? Also, like besides that, what are some like areas of innovation that you are like seeing in the DeFi space, or like opportunities to like be building in the DeFi space then? Yeah.
Right now I think I wouldn't call it like a 0 to 1 kind of innovation, but it's still very important, like probably a 1 to 1.5. I see more, I'm quite excited by some of the DeFi full stack portfolio management services building out. So I think one of the ideas that take hold recently is like a DeFi options wallet, which is basically you put your money into some wallet and they help you to have a systematic strategy to harvest the volatility in the market. Obviously there's risk, I'm not saying that it's riskless, but combining this with like a more full stack portfolio management approach, I can see this becoming a very good and sophisticated wealth management tool. So actually when you look at it, in the traditional finance, in terms of financial services you offer, you start from retail banking, and then you get offered the insurance. The next step is like a premier banking, right? So the only major difference between like a premier banking with like a retail banking is you get access to some of the more sophisticated product. They usually call it a structured products, and structured product is actually just a variant of options. They have some more complicated options to structure it for you. And actually this is what like the DeFi option work can already offer you, probably on a more vanilla basis. And I think that with a more full stack approach, right, a person can probably manage their wealth in a more different manner in their in DeFi. Like it's kind of like what the robo advisor is offering right now. They have a few portfolio, right, depending on risk tolerance and what kind of risk and liquidity requirement you have, and then you just allocate into it accordingly. I'm seeing this happening in DeFi. It's also like a more full stack based approach. Like you want to take more risk, then you can put into like a DeFi option while you want to or you can put into some like a LP for like a decentralized exchanges, or you want more lower risk, you just put into Aave. So depending on risk tolerance, you can probably adjust it. I'm quite excited by this as well. And another one that the entire crypto industry has been talking about since Bitcoin was founded is payment. I think payment have not taken off. There's a lot of reason behind it. But I think we might finally reach a point where close to crypto payment taking off. And there's a few catalysts. One is I think stablecoin have gotten big enough that people actually will have the incentive to integrate stablecoin. Just to show, give some examples. Like right now for the venture funding we do, I would say 95% are done via stablecoin already. So in fact, in some cases where the startup asks us to wire US dollar, we can usually ask them, can you just let us do stablecoin instead? Because it's so troublesome. We need to go to the bank and then they need to like wait for 1-2 days to check with the bank where they get it. Like if I send stablecoin, I just need to verify the address. When I send, I'm sure they got the money already, and they can just confirm with me instantly. So it's just much more efficient. And when we are doing like 5 to 10 investment a month, it's actually a huge amount of efficiency, and the workflow wise is just much better compared to doing like a US dollar wire. So on the investment side, I reckon it's the same for most other crypto VC as well. So this is a huge change. And I would say with the proliferation of stablecoin, you can see some major payment taking off as well. Probably not for the smaller one, but for the bigger one, I don't see why like it can't be done in stablecoins. And we do know that MasterCard and Visa are talking to a lot of the major industry players to integrate stablecoin payment in a pretty major way. So I foresee this to be quite exciting. It's probably not like strictly DeFi, but there's a lot of DeFi element into this as well.
Yeah. I think it'll be quite interesting to see a day where like there are point of sale systems, terminals at like actual physical retail stores where you could literally just pay via like a stablecoin.
Yeah. And one big thing, let's say for US, right, if you pay in stablecoin, you likely do not have any taxable event. But if you pay using any other crypto, it's a taxable event, so they're not going to do that, right? Yeah.
Interesting.
Okay. So for you spoke about the opportunity, right? What about risk in terms of the DeFi 1.0 protocols? Do you think that they can continue to stay relevant? Because everyone is trying to take over their lunch, right? So new protocols coming out every other day. This new shiny thing come out again. Are the DeFi 1.0 protocols still relevant or not?
Yeah, that's a good question. But actually, I think again you can look at the data and the statistic to see. I would say they will always be relevant, especially the leader, because they are the base layer for almost every other DeFi protocol to build on right now. Like, I actually don't really like the term because I think it's like just a marketing term. Like the whole DeFi 2.0, right? A lot of them is actually building on top of the DeFi 1.0 protocol. So without this DeFi 1.0, right, the DeFi 2.0 cannot even exist.
Yeah.
Right. So when you look at lending and borrowing, right, this is like a foundation of finance. Right. The top two protocols are still Compound and Aave.
Yeah.
And when you look at Aave, right, they have done 2 other new EVM chain deployments so far, and they have been dominant in the EVM chain they deploy to. The first one is Polygon. So they are still the largest lending and borrowing protocol there. And also second one is Avalanche. This is the most obvious example because Avalanche, they were not the first. Banshee was the first lending and borrowing protocol to launch on Avalanche. But when Aave launched on Avalanche, they became the market leader. Yeah, because Aave code have went through a lot more like a trial, like a test, both in the real world and time. So people know that the protocol is relatively safer compared to Banshee and whatever other new lending and borrowing protocol, even compared to Cream, right? Like Cream have so much incident already. So in that sense, people always trust this more because when you're putting a lot of money into it, you want something that is safe, right? Not something that have a lot of risk, although you get compensated by it, but it might not be worth it. And even for, let's say, Uniswap, right? You can look at their dominance actually has been increasing. Like people just because the price have not go up, people just don't pay sufficient attention. But Uniswap V3 just deployed to Polygon, and right now they're already doing more volume than SushiSwap and QuickSwap already. Yeah, I think right now their market share is like 50%, and they just deployed to that December 2021. They're like 6 months late, yet they become the largest volume of DEX on Polygon. So even in the entire DEX space, spot DEX, they are also the most dominant in volume. So you ask me whether it's relevant, it's more relevant than ever actually.
Okay.
Yeah.
Okay.
Yep.
So one of the challenges for when we ask people why are you not in crypto, right? And why are you not in blockchain, right? A lot of the responses seems to be, I hear people losing a lot of money. So rug pulls are very, very common. Again, back to the question I mentioned just now, right? Liquidity just move from one chain to another chain. A lot of bag holders are left behind. So what are some? I want to get your thoughts on that, right? Like, what are some red flags for you that you feel like this protocol confirms something wrong with everyone, and then you're like, I'm not gonna touch this shit protocol, lah.
Yeah. I think is I think first of all I have to say why people have that impression is I think fair number of people for some reason when they get into crypto, they went quite quickly to the highest risk protocol already. Like for example, during the Q4 last year, 2021, I am quite surprised by some of my acquaintance or friends that just new to crypto. They immediately become very engrossed in Olympus DAO or like Wonderland. And this is something that even a DeFi, early DeFi guy like me wouldn't really get involved in a significant way because we kind of see the risk, right? And it's also like even it's a legit project, it's also fall on the riskiest spectrum of the entire DeFi space. So the beginner, for some reason, they immediately went to the most risky one where the veterans like us don't even get that involved. So it's just like when you're going to stock market, right? If you stick with like S&P 500, like the top 100 company, compared to immediately going to GameStop kind of thing, it's obviously the risk is very different, right? So yes, crypto have risk and rug pull this thing, but it also depends on what kind of protocol you go for, right? You use and you interacted with. Like you go for stock market, you could also lose like 80%. Like if you go for the riskier stuff like micro cap, pennies, even Grab and C have dropped like what 70%
50,
from top.
60,
So so I think that's the analogy I want to use. And what is the red flags? I would say, I think we have a checklist, but I don't have it with me now. But I think first of all, I think there is a website that compile the code standard and safety, like how many like a code like audit that this protocol have went through. And like let's say for one example, like does this protocol have an admin key? The admin key usually allows like the developer to unilaterally make some significant changes to the protocol, such as like draining the user balances. It should not exist. Even if in some case the admin key exists, it should be held by a multi-sig instead of like being held by one single developers. And like the reorg code audit, do they have a sufficient bug bounty program? How transparent is the team in communicating the risk? Because all DeFi protocol have risk, but how transparent are they in communicating the risk, right? Some like try to hide away the risk and just promote the like APY, but some actually do highlight the risk, and it's all about like communication. I think it's just like how you would evaluate like a standard product. Like but I think one of the difference is like obviously DeFi do not have like a regulated disclosure system, so it's more like a self-regulated standard, like how much disclosure the team really want to put for it. So I think in that sense, yeah, it's just like how you evaluate like a non-crypto thing, like how transparent is the team, what kind of risk is involved. So definitely it's like we should do more due diligence. But another one is more heuristic, is like you look at how the team promoting it, right? Like if people hype it up too much, it's usually not true. And also sometimes like a lot of things, it should not go against some like common sense and financial rule. Like the money can't be created out of nothing, right? So let's say free money going on, you must ask where is it coming from. It can come from like a speculator want to finance and want to like invest in like a speculative stuff, but sometimes when it's getting too unrealistic, then you have to ask how is it possible. Like actual like a few thousand APY sustained for a year is very unlikely, right? Unless this protocol is going through like a hyper stage of growth.
Okay, so funny you mentioned that, right? So do you have an internal guideline as to how do you, evaluate the sustainability of a protocol, a DeFi protocol? Do all APYs just converge to sub 100? Is 1000% APY just too good to be true? Is there any rough guidelines for you?
We have a few metrics we look at, but generally speaking, let's say for the stablecoin denominated yield, if it's actually safe enough, you get a lot of like industrial scale farmer, like the trading firm, to come and farm it. So you will not stay above 30% for sustained period. Usually it will come below 30, and right now it's actually below 15 already. If it's safe enough. For the non-stable coin denominated yield, because your yield is fluctuating because the token price can drop, right? Then it usually will not stay above 50-60% as well. Because if it's above that, then you also like people farm it and then hedge part of the risk with the perpetuals or whatever. So so I think in that sense, the sustainable one usually will not stay above that range.
50 to 60%.
For the non-stable coin denominated one.
You can see 1000%.
And also for some, right, because the token emission is not that much, the reward is not that much, it cannot sustain more than a certain amount of TVL anyway. So it can probably at most sustain like 100 million of TVL farming it. It cannot sustain more than that. So
Okay.
I think it's quite funny that you mentioned also earlier that you had friends who are not new to who weren't into crypto, who like were using like Olympus or like Wonderland. And I think like I saw the same thing also with my circle of friends, and I think it's that feeling that you wasted time. They're trying to make up for lost time. You see the crazy 5-figure like APYs, and you go like, okay, this is my opportunity to catch up, right? And I think it's so dangerous that chasing that money, chasing that wealth, which I think a lot of people aren't aware of. Which I thought was a very, very interesting point that you brought up. I think besides that, you kind of touched upon like the due diligence checklist that you guys go through, right? I understand that a lot of it is, like you mentioned, technical, so it's like looking at the code and stuff like that. But is there also a formal due diligence process involved with like looking at the socials, looking at what people are talking about online, the amount of like noise that is gathering? Do you guys look into like the Discord channels or like anything along those lines regarding like socials? Because I think to me that's quite interesting. It's beyond just like the technical side of things, right?
Definitely. We try to gather as many data as possible, and I think that's actually one of the beauty of crypto and DeFi, because so much of the data and whatever conversation is happening is actually transparent. Obviously, a lot of it have moved to Twitter, but I think the three major places where you get the information is a bit unorganized. Twitter, Discord, and Telegram, and in some cases the governance forum. So we definitely try to gather as many data as possible before we make an investment or even deciding to provide liquidity to the protocol. But actually I would say that we have not been that active in providing liquidity for like pure farming purposes. Usually what we do is we provide liquidity to support our portfolio company or protocols, because since like last year I'm pretty skeptical on the sustainability of most farm. Like especially it's like a pure mercenary yield farm. I don't think it will last very long anyway. So the risk reward for us to take that risk, it's not that high. I would rather just continue to support in like a good protocol and just bootstrap their use cases.
Okay.
Fair enough.
Okay. I wanted to hear your thoughts on TPS, so transaction per second, right? So a lot of the narrative on the new layer ones, right, seems to be on TPS, right? That's exactly why they started the new blockchains, right? But when it came to the being battle tested, right, a couple of them fumbled. So like recently FTM, Solana as well. What are your thoughts on that? Because a lot of like blockchain, the layer ones, right, they say like, oh, I can do X amount of TPS, but they actually couldn't. And when traffic came, network is still congested.
Yeah. So
Yeah.
I think that this has been a recurring issue since 2017 lah. People always say, the next Ethereum killer,
Yeah.
20k TPS, 50k TPS, because it's like you can put in a chart and comparison table, right? So it
Yeah.
looks sexy,
Yeah.
but the devil is always in the details. So recently, Dragonfly Capital, a crypto VC, published a very good research on comparing TPS on a more practical basis, because when people advertise a TPS, right, it's always on like a simple payment transaction, like transferring of token or the native currency, right? These are very simple transactions, so it's obviously easier to process. But let's say a protocol that can process, let's say 50k simple transaction per second doesn't mean they can process 50k of DEX trading or like a lending, borrowing kind of transaction per second. So because these like consume a lot more gas, or in Solana it's like compute unit, so it will not be able to process the same amount. So the Dragonfly did this, like they use like a benchmark. The action they use to compare is the Uniswap V2 styles swap, and the TPS was actually way lower than advertised. Like I think like most other chain like I think they did Avalanche, BSC and Solana was only like I think few hundred, and in Solana it's like few thousand per second. So instead of like 50k, it's actually few thousand per second. It's obviously still way faster than Ethereum, but it's obviously not like 10,000 times better. So I think the devil is in the details lah. Like how the TPS like is a lot of like marketing mess in the TPS claim. Yeah.
Okay, so based on that, which chain do you think is like has the most upside right now, has the most promise right now?
It's very hard to say that. I can just, the disclaimer is that Defiance, we are still very bullish on Ethereum because it's still the king of smart contract blockchain. It has the most mind share, most of the best dev working on it. We are also very bullish on Solana and Avalanche as well, because Solana we spent a lot of time talking to the developers there. I'm the judges for like a 2 hackathon already, including the existing hackathon. We see the developer quality is there, and it offers a very different architecture compared to Ethereum. So we think that if you want to compete Ethereum, you should not compete on the same kind of architecture. You should have a brand new design, and this is why we spent time researching into it, and we found that the developer quality generally quite high, and there's a lot more use case that can be unlocked with the kind of architecture of Solana blockchain. Obviously, right now the ecosystem is a bit of like a consolidation phase, because like a lot of token price have dropped a lot as well, and the hype cycle kind of like went too much and then come back down. Avalanche, I would say, is like the king of like a non-Ethereum EVM chain right now, because like there's sufficient technical pedigree into it, and the community into it is quite vibrant as well. So obviously, like another one is huge is BSC, because they use the Binance like brand to onboard a lot of the user into the Binance ecosystem. But yeah, I think they still have some way to go in their road toward decentralization. I think they're trying to solve that, but at the current stage, is not really there yet, in my opinion. So so I think I'm the most bullish Ethereum, but followed by the few I mentioned just now.
Okay.
Sorry, forgot Terra. But Terra is a bit of a mix, because when you ask the team and whatever, the biggest vision is always to increase UST adoption.
Yeah.
But Terra blockchain itself can also support some smart contract transaction. So you see Astropod, like Nexus, some of the things being built on the Terra chain itself as well. So it's also kind of like a hybrid between like a smart contract chain and also a chain that have their own stable coin that want to go to other chain and become the de facto decentralized stable coin, right? Yep. So we're also investing in Terra, but it's interesting to see how the ecosystem will develop, becoming like a more like a stable coin denominated chain, or like they also have a vibrant smart contract things happening on their platform, on the protocol itself as well.
Hey guys, so we had a lot of questions for Arthur, so we're going to split this into part 1 and part 2. And so if you enjoyed this video, please like it, subscribe to the channel if you haven't already, and stay tuned for part 2. We'll see you in the next one. Bye bye.